Are we in a bear market, or have we now entered a bull market again? Well, the correct answer is it's really hard to tell, because a bear market is defined as a prolonged downturn in prices of the overall market by 20% or more since the peak. And that for sure has happened in my market from March of 2022 till January of this year, when the overall housing market dropped 21% in the Fraser Valley. But this is only after having seen multiple bull runs over the last decade, starting in 2015, which accelerated into 2016, and then also into 2017, part of 2018, and then again in 2020 and 2021, where the market continuously increased by 20% multiple times. And now with prices seemingly rising everywhere all over again for the last 2 months, it leaves everyone fighting in the comments about whether or not this market is about to crash even harder. Or maybe you've just missed your opportunity again, and the housing market is about to get even less affordable than ever before. So in today's video, I'm going to help you put some perspective on the market so you can help make a better decision for your next real estate purchase. But before I do, please subscribe to the channel if you would like to stay up to date on my markets of Surrey and the Fraser Valley. And no matter what you think is going to happen next in the market, please go ahead and click the like button to help more people that think the same way as you do, so they can help tip the scales of this channel's weekly polls that help find out very important things like, are uglier, cheaper houses better? Or are you subscribed to my podcast yet? And please always remember that if you're still not sure if you want to buy or sell a house here in my market of Surrey, BC, even after watching this video, well, you can always book a call with me using the link in the description below. And now let's talk about the market. And I want to start off by talking a little bit about how we got here, because in my estimation, this all started July 2nd, 2003. Yeah. Almost 20 years ago. You see, that was the day that the IOC, or the International Olympic Committee, announced that the 2010 Winter Olympics would be coming here to Vancouver. That spurred on massive investment into Vancouver and its surrounding cities, particularly investments into the infrastructure of which we have never seen in this city before. Well, maybe we did for Expo 86, but I'm going to bet that not many people watching this video were even likely alive back then. But the 2010 Olympics, in my estimation, really opened up the world's eyes to what Vancouver was and could be in the future. And after the great financial crisis of 2008, the Olympics are likely what spurred on the first big run in real estate in Vancouver, because in 2015, 2016, Vancouver really started to blossom into an international city. And as a result, international buyers from places like the US, India, and many from China started buying up real estate all over the Lower Mainland. And that went on until a failed bid to get reelected, when Christy Clark introduced a foreign buyer tax of 15%, immediately killing the market in 2016 for a period of 6 months. But when the public realized that no, in fact, foreign buyers aren't the problem here in BC, when you're immigrating more than 250,000 people every single year into a country of 35 million, well, the market took off again until the expansion of the mortgage stress test in 2018. At that time, instead of being qualified for a rate that you receive from the bank for your mortgage, it was introduced that you would have to now qualify for a higher amount in case interest rates went up. And that's exactly what they did. It's very often forgotten, but starting in 2018, prices declined for the following 18 months until December 2019, when they bottomed. And this is the part that people don't like to admit. Way before we all stayed home for 2 years, the market had already started to recover. Then, as the Bank of Canada slashed rates and World Bank started printing money to keep the economy afloat, well, that is when things started to get out of hand, and detached home prices increased 70% in my market for the next 24 months. And only then, in March of last year, is when the crash started. Well, now then, the media and the bubble bursters out there will have you believe that the market started to crash in March of 2022 as a result of the first interest rate announcement of an increase of a 1/4 point by the Bank of Canada on March 2nd of that year. But the tipping point appeared to actually be February, as that is when all three asset classes peaked in the average price across the Fraser Valley. And then, with another 4 full percentage points of increases since that first one, well, it appears that yes, the last 9 months of 2022 constituted a bear market by definition. But at a closer look, those numbers showed that single-family homes saw their overwhelming majority of losses by as early as September, meaning that the real crash might already have been over for now 6 months. But this is where you have to be careful, because we are likely entering into one of three possibilities. First off, this could be a trap. You see, in the stock market, often after a steep decline in pricing, a stock might recover over a short period of time before declining even further. But in the 42-year history of Fraser Valley Real Estate Board statistics, there has not been a single case of that happening in the real estate market, or at least my real estate market. So that leads us to the second possibility, which is that we may have hit bottom and are on our way to a recovery that could see yet another bull run. Now, generally speaking, after any previous market drop here in the Fraser Valley, the downturn lasts between 6 and 18 months. And now with 12 months passed already from the peak, every day that goes by means that we are likely getting even closer to the recovery. Now, I don't think the likely outcome is another bullish market where we see returns to peak pricing. I just don't. And that's because now, well, higher interest rates and carrying costs of properties are higher than ever before, and affordability is now at a range that's just unprecedented. But it's said that high interest rates are actually not the issue at all, and that it's actually changing interest rates that create the problem. And that is actually true for the market in both directions. Rate cuts create an issue of prices rising extremely quickly, and then rate hikes cause people to hold off while prices crash. Both are bad, by the way. Or we could end up with the third possible outcome, which is that maybe the market just trades relatively flat for a while. You see, as interest rates stay flatter and maybe only move a quarter point at a time, prices should start to recover, but on a much slower basis related to other fundamentals of the market outside of interest rates, like immigration, supply and demand, employment, and yeah, here in Vancouver, even weather. But it looks like, as of now, the largest price drops are behind us. And now we've even seen the last 2 months consecutively increase in price in all asset classes. So now you have to make a determination for yourself. If you are of the opinion that this market is a trap and it can only go down from here, well then, maybe you should look at selling if that's what you truly believe, and then wait for a better entry point back into the market and save yourself a whole bunch of financial heartache while your new landlords lose their equity instead of you. But if you think the market has bottomed and it can only go up from here, well then you had probably better try to get in while you can. Because if prices keep doing what they have done now for the last 2 months, you're going to be paying more for your next property in the future if you wait. But that makes me think about the word of caution that I do have for anyone that is waiting now for lower interest rates as some sort of savior for your own personal situation. If this is you and you think that both prices and interest rates are now going to go down, you have to understand that interest rates will likely not go down until unemployment spikes and a full-blown recession sets in. And if that happens, you're probably more likely to feel like waiting even longer makes even more sense. And then you might just end up missing the bottom of the market like you possibly have just done by not buying this last January. Now, everything I've set up to here is a big maybe, and you have to pick which side of the argument you believe is most likely. Because the truth is that nobody knows where the market is truly headed. Facebook pages calling for the market to collapse have been kicking around since 2016 when they thought that was the bubble. You know, back when you could have bought a really nice detached home here in my market of Surrey, BC for $700,000. Meaning that according to them, house prices should crash another 70% from today. And at the same time, people who speculate on pre-sale units could find themselves in serious trouble over the next couple of years, as they may have made some really poor choices to invest when they had probably no business doing so in the first place. But now when it comes to you, your plan should probably be to buy when the time is right and when the numbers work. Because over the last 42 years, the average rate of return in my marketplace in real estate is 6.6%. So sure, 1 out of every 8 years will show negative growth. But you should only be buying real estate with an absolute minimum of a 5-year plan. And you should ideally be buying something that you can live in that will be safe for two things, both your family on a day-to-day basis and your financial freedom, not tomorrow, but in 20 years from now. And please remember this one thing. YouTube comments, media, bears or bulls should not determine where you are looking to live, nor should they influence your timing on making a purchase or a sale. Because if you would like to make a purchase or sale, you need to engage a professional to help walk you through that process. And if you would like to discover if the time is right for you and you're looking to move here to my market of Surrey, BC, well, you can book a call with me using the link in the description below. Thank you so much for subscribing, clicking the like button, and we'll see you in a couple of days.